Hi everyone, welcome to the session. Let's try to answer these mock type questions. The first question is extract from the equity section of the statement of financial position of Beta Limited as at 31st December 2020 is given below. Share capital account is $1 each. The value is 150,000 US dollars and the share premium is 40,000. So these are the opening balances as at 31st December 2020. During the year ended 31st December 2021, Beta Limited issued 120,000 shares, $1 each, ordinary shares for $5 each. So what was the balance on the share premium account? So we had an opening balance of 40,000 US dollars. After issuing this, what will be the closing balance? Okay, the answer is 520. How did we arrive at this number? Basically, your nominal value is $1 and these shares are issued at $5. So the issue price is $5 and the nominal value is $1. So that difference multiplied by the number of shares issued. Number of shares issued will be 120,000 shares. So here issued price 5, nominal value is 1, 120,000 shares were issued. So therefore the share premium for the issued shares will be 480,000 plus we had an opening balance of 40,000. So once you add opening balance to the new balance, that will be 520,000. So this is the correct answer for this particular question. Now let's move on to the second question. Which two of the following errors could not occur in a computerized accounting system? Okay, let's go through. The first one is the discount received balance was listed as a debit on the trial balance. Okay, a discount received balance was listed as a debit balance on the trial balance. The second one, dividend paid ledger account balance of 1,200 was recorded in the trial balance as 1,000. There was a balance in the dividend paid ledger account 1,200 that was recorded in the trial balance as 1,000. Is it possible in computerized accounting system? So this is what we need to answer. A contra settlement was recorded in the receivable and payable general ledger accounts but had been reversed when recording the transaction. Okay, an item of asset expenditure was recorded as a maintenance expenses. Okay, if you take the first one, a discount received balance was listed as a debit on the trial balance. Can this happen in a computerized accounting system? In a computerized accounting system, the discount received account is automatically recorded in the correct side of the trial balance. So therefore this cannot be misclassified as a debit balance in the trial balance. So whatever the balances in the ledger accounts will be picked automatically to the trial balance. So therefore these kind of errors will not happen in a computerized accounting system. The second one, similarly the ledger balances are picked automatically by the system. So you have a ledger balance of 1,200, this will automatically pay to the trial balance. So therefore if the dividend paid ledger account balance is 1,200, it will correctly appear as in the trial balance. So there is no manual intervention that could lead to an incorrect figure being reported. Okay, so whatever the balances in the ledger, that will be recorded in the trial balance automatically. There is no manual intervention. So therefore these kind of errors also cannot happen. Third one, a contra settlement was recorded in the receivables and payables general ledger account but had been reversed when recording the transaction. So when the accountant records these kind of transaction, he might make mistakes. Okay, so this type of error could happen during manual entries where an accountant might mistakenly reverse the transaction. So these kind of entries could happen. Okay, And the last one is an item of asset expenditure was recorded as a maintenance expenses. So this also can happen, because this error could also happen if the accountant selects the wrong account for recording the expenditure. So when you select the proper account instead of selecting the asset account, if he had selected the expense account, so this can be recorded in the computerized accounting system. So therefore, the correct answer is A and B. Which two of the following errors could not occur in a computerized accounting system? So the first and the second one. Now let's move on to the third question. Business paid insurance premium 15,000 US dollars during the year ended 30th June 2014. At 30th June 2013, there was an insurance prepayment of 1,200, and 30th June 2014, there was a prepayment of $900. So what was the insurance expense for the year ended 30th June 2014? So we need to identify the insurance expenses charged to the profit and loss account. So if you open up the prepayment account, this is the prepayment account, prepayment of insurance. So let's take the opening balance first. There was an insurance prepayment of 1,200 at the beginning. So therefore, so your balance brought forward was 1,200. And 30th June 2014, there was a prepayment of 900. So therefore, there was a closing balance. So closing balance will be balance carried forward. That's going to be 900 US dollars. So this will be the carried forward balance to the next financial period. So balance brought forward 900. Okay. So during the year, there was a payment of 15,000 US dollars. So when you pay this, you would have credited the bank account. Okay, you would have credited the bank account, and this amount has to be debited to the prepayment account. Okay, bank credit, debit the prepayment account. So what is the expense charge to the profit and loss account? So this is what we need to identify. What is the amount to be charged to the P&L account? So if you take the total 16,200, 16,200. So here the balance will be 15,300. Okay, so this is the amount to be charged to the profit and loss account as prepaid expense, insurance expenses. Okay, the fourth question. At 30th December 2014, business wrote off two debts 900 and 1,250 respectively. It also required an allowance for receivable of 7,500. The allowance for receivable balance as at October 2013 was 8,400. What was the irrecoverable debt expense for the year ended 30th September 2014? So let's open up this account. Irrecoverable debt expenses account. Okay, and also we need the allowance for receivable. So this is the provision account. The provision account, when you take the allowance for receivable, the provision balance was 8,400. So let's take the provision balance brought forward 8,400, and they wanted a balance at the year end, which is 30th September 2014, to be 7,500. See, it also required an allowance for receivable 7,500. So this 8,400 was opening balance. This was 2013 opening balance. So 2014, they want a carried forward balance of 7,500. So if you take 7,500 at the year end, this is the opening balance. So which means there was an over provision of how much? It was 8,400. Now you need a provision of allowance for receivable of 7,500. There was an over provision. So therefore this over provision has to be reversed to the profit and loss account. How much is that? 900 to be reversed to the irrecoverable debt expense account. Okay, this amount will be reversed because there is an over provision. It has to be credited. Apart from that, they are saying a business wrote off two debts, 900 and 1,250. So when you write off, what is the double entry basically? So you need to credit the receivable account, the debtors account. For example, if you, let's say you have an accounts receivable account, it will be usually a debit balance. So when you write off, you need to credit the accounts receivable. How much? 900 and 1,250. So you credit accounts receivable and debit the irrecoverable debt expenses. So therefore you can say bad debts 900 and 1,250. Okay, so what was the irrecoverable debt expense for the year? Okay, so when you balance this account, you will have the net amount to be charged to the profit and loss account. That will be how much? 2,350, 2,350, sorry, 5, 9, 11, 2,150, and here 1,250. Okay, so this is the amount to be charged to the profit and loss account. So this is from the allowance account, which is this 900. Okay, so this is the correct answer for this question. Okay, now let's move on to the other question. A sole trader purchased a machine for 1,000 for long-term use. The sole trader incorrectly posted the following double entry: repairs and expense account 1,000, bank account credit 1,000. So what type of error is this? Extraction error, error of omission, error of commission, error of principal. So we know this is a principal error because this is a capital nature expenditure has been recorded as revenue expenditure. So this error arises because the transaction was recorded in the wrong account. A capital expenditure was incorrectly treated as an expense. So fundamentally misrepresenting the nature of the transaction. So therefore this is error of principal.